Hello everyone, and welcome to our channel Mutechi. We're thrilled to have you here today. Today, we are going to see about something really practical and important if you're considering entering the agricultural sector. We'll cover the different sources of finance available for setting up a dairy farm business. Let's dive in. Alright. Let's start with the basics. Setting up any enterprise, whether it's a dairy farm for milk production or a dairy processing unit, needs one crucial thing: finance. It's the key that pulls together all the other resources, people, machinery, materials, to get things started and keep them running. As experts like Cameron and Patrick have pointed out, arranging affordable finance at a reasonable interest rate is one of the most vital tasks for any entrepreneur. So, where does this funding come from? Broadly, we can divide it into two main categories: in-house sources and outside sources. In-house sources are essentially your own funds, your savings, investments you make as equity. It could also be deposits or loans you personally provide to the business, or even drawing a personal loan against your provident fund or life insurance. If you have an existing business, reinvesting the profits is another great internal source. Now, let's talk about outside sources. This is where you look beyond your own pockets. Funds can be raised from various financial institutions. Think microfinance through self-help groups, development banks, commercial banks, financial corporations, and cooperative banks. Of course, you might also borrow from non-institutional sources, like supportive relatives and friends. Although, this might not always be sufficient, especially for larger projects, like a milk processing plant. Outside funding often comes in the form of loans, which can be categorized by their repayment period. Short-term loans. These usually need to be repaid within a year or less. Medium-term loans. The repayment period here ranges from 1 to 5 years. This is often used for smaller expansions, renovations, or equipment replacements. Long-term loans. When the repayment stretches beyond 5 years, it's considered long-term capital. This is typically needed for significant expansions, like installing large new plants and machinery. An interesting avenue, especially for smaller scale or community-based initiatives, is microfinance. It's broader than just microcredit. It includes deposits, loans, payment services, and even insurance, all tailored for those who might not have easy access to traditional banking. Many microfinance services operate across India, aiming to provide quick and easy credit, often without any collateral. A popular model within microfinance is the self-help group, or SHG. Imagine a small group, maybe 10 to 20 people, from similar backgrounds, coming together to tackle common financial challenges. They save regularly into a common fund, and use these savings for micro-enterprises. The main goals? To provide a forum for the financially excluded, foster cooperation, offer suitable savings options, and deliver credit cost effectively. There are guidelines for forming these groups, often ensuring members are local and share similar socio-economic backgrounds to encourage good interaction. Now, for more formal and potentially larger scale funding, especially specifically for dairy farming, financial assistance is available from banks, often with refinance facilities from NABARD, the National Bank for Agriculture and Rural Development. How do you access this? Farmers should apply to the nearest branch of a commercial bank, regional rural bank, or cooperative bank. They'll have prescribed application forms available. Keep in mind, for larger dairy projects, you'll likely need to prepare a detailed project report. What can this bank finance cover? Key capital assets, like purchasing your milch animals, construction of sheds, and buying necessary equipment are included. Even the initial feeding costs, for the first month or two, can often be capitalized as part of the term loan. Other potential costs, like land development, fencing, digging wells, getting electricity connections, transport vehicles, and even basic milk processing facilities, might be considered for the loan. However, it's crucial to remember that the cost of the land itself is typically not considered for loan. So, in conclusion, setting up a dairy farm or a small-scale milk processing unit often relies heavily on institutional finance for that initial capital investment. While loans from friends and family can help, they might not be enough. Thankfully, in our country, institutional finance, especially from commercial and development banks, is quite attractive because of the low rate of interest being charged compared to other borrowing options. These financial sources we've discussed can be valuable tools for raising the funds needed to launch your dairy enterprise. And that wraps up our look at the sources of finance for setting up a dairy farm. We hope this overview was helpful and gives you a clearer picture of the funding landscape. Remember, planning your finances carefully is a critical first step towards success. Thank you so much for watching. If you found this video informative, please give it a thumbs up, subscribe to Mutechi for more content like this, and hit that notification bell so you don't miss our future updates. We'd love to hear your thoughts or questions in the comments below. Until next time, take care and best of luck with your ventures.